Hello, everybody. Welcome to Friday. We didn't have a show today, but I did want to do a summary for what I saw happening this week, in the stock market. The S&P 500 was actually down a little bit today, 0.14%, but it turned out we had the best week of the year, had a decent Monday, great Wednesday, decent Thursday, for example. So the big story this week was really revolving around the Federal Reserve. They had their meeting and they, decided on what they were going to do. They put out what's called a statement of economic projection, which they do 4 times a year. And they put inside of that, they have their dot plot where they tell, the markets, their guess, each governor guesses where they think interest rates will be by the end of the year. And they were still looking at 3 cuts for the year, just like they were back in December for the last dot plot. And the market was getting nervous. We'd had some decent, numbers coming out of CPI, and some of the inflation looked a little bit hotter. Matter of fact, there was a kind of the highest withdrawals from funds at the beginning of this week, which was a big mistake because all those people ended up, maybe jumping back in or what have you, because the market did take off based on what the Fed's doing. So I think the theme that you have to concentrate on right now is that the Fed is ready to start lowering rates. They're okay with some increases in inflation here and there. They want to make sure that they don't end up in a hard landing. We're looking for a soft landing, and they talked about that too. Just meaning that if we do have a recession, it would be quite slight, and you might not even notice it, type of thing. Soft landings are not common, but we might be able to engineer one here because we have so much demand coming out of the pandemic, pent up demand, that it's kind of softened, this rate increases that they've done. And things are slowing down a little bit. So I think they're looking at that and saying, okay, we can do some rate cuts. And markets do really well in a rate cut environment, just because it just means that there's less competition. Bonds would pay less, and when rates are lower, CDs and money markets pay less. And so, I mean, even CDs now, I mean, last year, everybody was excited about 5% CDs. This week we had almost 2.5%, best week of the year. So Marnie's starting to come out of those CDs. I'm seeing it even within my clientele, where people are looking at that and saying, hey, this market looks exciting. And it is exciting. This is a great week, a great year. I think we're up almost 10% or a little bit over it for the year so far. And a lot of it's being concentrated in kind of the technology area. The SOXX ticker symbol stands for the iShares Semiconductor Index, has done really well. We've had that in our portfolio for a while. But we are seeing a broadening of the market. I follow Invesco equal weight S&P 500 ETF with the RSP as the ticker symbol, and that's had a really good run here, and it's keeping up with the S&P 500 over the last 30 days, and actually it's been a little bit better over the last week. So the market is starting to broaden out. We keep hearing about the Magnificent Seven and what have you, and some of those stocks are actually struggling, like Apple and what have you too. But the money is moving into that broad market as a whole, and we're starting to continue to see this gains. The big concern, of course, is just we're stretched pretty far out, but again, the stock market is a representation of human emotion. When you get a crowd together, you often don't end up with kind of an average. We don't average rate of return is almost 11% long term. You hardly ever get that. You get these extremes, 20 up or 20 down or whatever it might be. So this is one of those up situations. It's not just based on some random concept. I mean, these are real money being made in this artificial intelligence. I mean, NVIDIA's earning report was an eye opener. It was something else. If we start to see some spread of that across, and we're seeing some of these other semiconductor stocks really take off, eventually it'll move into other areas. We saw Reddit go public this week, had a 50% jump. And so the IPO market might start to get hot. That can really bring money in. Unfortunately, if they bring out enough IPOs, there's so many shares kind of flooding the market that can soften the market. But at the beginning of this, and kind of in this, motion that we're in now, this kind of, strong market, we should see some broadening. We're seeing that. We should start to see the IPO market take off. We should start to see more examination of other companies besides NVIDIA and other areas. We should start to see IPOs for some of the other AI stocks that are out there coming. And then, of course, the end of it will be this crazy mania. We'll have to watch out for that. But we're pretty far away from that at this point in time. I do think things move faster now than they did, say, in the 2000 bubble or what have you. But nonetheless, we've got a ways to go, I think, on this. We can still have 10% pullbacks and all kinds of things that can happen, but and that might give us a good opportunity, to buy in. But I think everybody's looking at the same thing. We haven't even had a 2% downturn in probably about 275 days or trading days now. So that's pretty good. I have to go back to 2018 since we had a better record of runs. So it's been quite smooth on a daily basis. And so it's a great market, a good place to be invested. The bond market is still scuffing along. It's doing a little bit better now that the Fed has, declared, their intentions again, and the market is buying into that. The bond market gets a little worried about inflation, of course. And so, we'll see what happens there. But, it would be nice because we still have, our average client has nearly 40% in bonds. So sometimes that can, hold the portfolio back if it's not doing well, but it's doing okay. Not like the stock market, although it could, if they actually start lowering rates, and if there's some, reasons for that look solid, then the bond market could actually do even better. Could be a good play there, actually. So anyway, look forward to being able to see you next week. Of course, I'll do my daily video start on Monday through Thursday, and then Friday we will have a show again going. So look forward to seeing you then. Thank you.